Morning, Nolan, Bitcoiner. Another episode of The Breakup, a show where we take a look at daily news stories and how they relate to the psychology engine that is our economy and how we exchange things. So we generally try to contrast the US dollar with Bitcoin on this show. But today we're going to be talking a little bit about the Turkish lira just because it's part of the same system. So while we're only going to be talking about the US dollar at the end, it's going to be part of the context because we're going to be talking about something called the Bretton Woods system today. I called this on the YouTube title, Can Turkey even go to the Bretton Woods system? Can it even help them? So that's what we're going to try to answer. Bretton Woods, just so you know, was a system set up after World War II, really during the end of World War II, to reset the entire monetary system in the world. And what it basically did was made every currency relative to gold. So they floated only relative to the gold standard, and then a US dollar was the pegged currency to gold. So in effect, everything became relative to the US dollar, and that's a world we still find ourselves in today without the gold piece. So still everything relative to the US dollar. So that's important to consider when we look at the options. So this week, Turkey has been going through tremendous amounts of trouble with their inflation. It's been going on for years now, but really hit a fever pitch over the summer and has continued straight through. And Drojan, their president, said, I'm going to war against Bitcoin back in August, and that really hasn't worked out for him so well. So this week, he initiated a few more policy solutions. He's decided to raise the minimum wage by 50% starting January 1st. He had to shut the stock market down the other day to prevent the trade of the lira versus other stocks, and where people were going with their money was putting it in the stock market, just like they are in America today. Because if you're worried about inflation and then you buy equity in a company, generally their cash flow is in that money, so they're somewhat protected from the tough parts of inflation. And that's why a lot of Americans today see our stock exchanges and say, well, they're doing so well. It's partly because no one wants to hold cash, because every day you hold cash, you're losing. So put it into a stock market and get some insulation against inflation. So he had to, it's a circuit breaker. You've heard circuit breaker in England when it comes to COVID and lockdowns. It sounds like they're going to hit the circuit breaker for Christmas. Well, this was the original circuit breaker, the circuit breaker for exchanges. And this circuit breaker was flipped the other day to make sure that Turkish people themselves couldn't continue to add fuel to the fire for the inflation problem, because they were selling their Turkish lira at a discount in order to buy more stocks. So done. The other part is they're actually selling so a lot of countries hold foreign reserves, US dollars, euros, whatever. In this case, Turkey is selling those foreign reserves actively in the market and buying their own Turkish lira in order to prop it up and help it maintain balance. Now, there's only so many, within the Bretton Woods system, there's only so many iterations that money and exchange rates can take. Because it's all relative to the US dollar, there's only so many things you can do. And this is sort of the four that I've whittled it down to explain some of the trade-offs for each. So when you've got a monetary union, you have no exchange flexibility because it's out of your hands, right? You basically joined another country. We see that in the Bitcoin world with El Salvador. El Salvador joined the US dollar. That's a monetary union. They took their money and decided to not create an El Salvador currency after the last one failed, and just borrowed the US dollar off the shelf. Another reason why they've become the first country to institute Bitcoin as a national currency, because they don't really have a lot of control over what's going on in the US dollar. And if there's printing going on in the US dollar, they're not really insulated from it, because when you look at this flexibility piece, you basically abdicate your sovereignty as a country to other countries who are doing it when you borrow their currency. In the case of El Salvador using Bitcoin, that's really a hedge. They lost policy by using the dollar, but it brought a lot of benefits. But they're stuck with whatever happens in the United States. So Bitcoin does give them sort of an option, right? A very interesting option. And I predict you'll see a lot more of that. Paraguay yesterday started to move towards that, especially with its energy matrix. The next one here is a currency board. You see this guy on Twitter right now. His name is Steve Henke. And he's a big anti-Bitcoin guy and has been for a long time. But I still follow him because I still think he makes interesting observations, kind of a gold bug kind of not a liberal spender and someone who believes in policy as the solution to all problems. Certainly someone who I always thought would spiritually be a fan of Bitcoin, and that's why I've continued to follow him, because he does have pretty accurate criticisms on stuff that isn't Bitcoin, and I find that pretty interesting. So he's been calling for this currency board piece. A currency board is when you get a few economists that come in. It's a little bit like a debt restructuring thing where they sort of take over and are the ones who are going to institute whatever exchange there might be for the money they have left for another currency. So it's a bit like receivership or those kinds of ideas where your corporate entities are now bankrupt and someone has to come in and be a steward of the company. Now, these are all the private industry analogies. They're not exactly how it works, but a currency board is exactly that. It's a bunch of people who come around, and instead of the country managing it, these people manage it to their best of their abilities. So currency board is something that Steve Henke continues to ask for. And what that would do is it would use the US dollar, it would create a peg, it would do all these different tricks. Fixed rate is a lot like a peg. Most stable coins and cryptocurrencies use this approach where you put a bunch of money into an account and you hold it there, and then you use that to help prop up the exchange rate between that country and usually the US dollar. We see that in countries like Hong Kong. They use a peg. The Hong Kong dollar is always 7-1. I live in Barbados in the winter. Barbados is a 2-1 US dollar peg, so they keep deposits in their country and they keep the exchange rate constant. China, in some ways, with the renminbi, uses that system as well. So countries that do not have a floating rate use this fixed rate and then manipulate using policy levers. We have these, and then finally the last one is the floating rate. So that would be like a Canada or the euro. You couldn't really put the Japanese yen or South Korean won in there because they definitely do use some tools to keep it closer to a fixed rate, although it has some floating aspects too. So it would sort of fit as a hybrid in the middle here. But here's the important levers. When you start pulling on these levers to manage the exchange rate and you give up exchange flexibility, so more exchange flexibility this way, you can see the arrow, less exchange of flexibility that way. So the other day when Adrogen hit the circuit breaker on the stock exchange, he was basically doing this piece here. He was getting rid of the floating rate. So the exchange flexibility went away and you couldn't make a market. Here's the anti-inflationary trajectory, which is opposite to exchange flexibility. So floating rate does not give you any ammo to fight against inflation if that's your problem. And what happens is fixed rate better. That's why the Chinese do it. That's why lots of countries do it. They want to be able to keep their rate relative to the United States at something that's optimized for their economy and their manufacturing base in that case. But as you go further, it becomes quite effective. Eventually, you get rid of your money when you go to the monetary union, like what El Salvador did. So they never even had to worry about it anymore. So definitely anti-inflationary. Unless, and we're going to get to that, the very union you've entered with, say it's the US dollar, currently experiencing its own inflation, then it's only as anti-inflationary as the merger and union that you've joined with. So it's not exactly that. The final one here is credibility and dependence. So usually you gain in credibility when you head this way. Usually you gain in credibility when you head this way, because what's happened is here is it's blown up and the policies didn't work. So there's not much trust in the entities using it. And that's why it moves that way. You remove the human error basically by putting the currency board in, because whoever screwed it up here is gone. So you've sort of fixed credibility, but you're now dependent on others. So your dependence level is growing. Now, this is all important when we compare it to the United States currently. Well, first of all, let's just look at the policies here. Let's look at what Turkey can actually do in this case. What options do they have? So monetary union, possible. Could they join with Europe, experiencing its own inflation? So it doesn't really help. And they've had a ton of trouble with that European situation for years, so probably a non-starter. Currency board, yeah, possible. But much like fixed rate, you'd have to use the US dollar again as the peg. The US dollar is currently experiencing its own inflation. So I often use this mental model. We use water in the metric system to get a sense of volume, temperature, dimensions, length, width, height, standardized meters. Everything actually comes from the properties of water. So temperature, for example, in metric temperatures. We said arbitrarily that, okay, water freezes at this point. Well, let's make that 0. It boils at this point. Okay, well, let's make that 100. Let's divide those into equal pieces, and then we'll have some semblance of a way to gauge things, a measuring stick. The meter in the metric system is just an extension of that. It is, what is the volume of a cubic meter of water? So once you put the water in, you get a sense of what the volume is, and then you just do the math and extend it, and you'll find what a meter is based on those formulas. So the point is, the properties of water are what gives the metric system its predictability, its easy comparing, contrasting qualities, and it allows you to use it as a measuring stick. It becomes the reference. Now, all these other ones here, fixed rate, currency board, monetary union, because of the way the Bretton Woods system works, the US dollar is the water in that system. And everything only makes sense if you measure it relative to the US dollar. So if you try to measure it against something else, it won't make as much sense. So everything almost in the world is related to the US dollar. When I worked in the Canadian Senate Banking Committee, one of our main jobs was to look at the policy levers we had in Canada around the currency. So the central bank, they would just report them to the Senate. So they're not for the Senate to administer. They're definitely the Central Bank of Canada. And we would often hear, well, we have policy levers. It's not just raising interest rates or lowering interest rates. The interest rates in Turkey is already at 14%. So it's already super high, or 14%. So it's already at 14% in Turkey. They can't raise their interest rates much larger because people have taken on debt, and that would just have other problems in the economy. So when I would listen to Mark Carney and a lot of these other central bankers in Canada, they would often go back to, we have policy levers, and they would just say it like that. And I always wondered what it meant. And it was basically they could sell foreign cash, which is what Turkey's doing today. There's a few levers they have, but there aren't that many in the end. I was always curious what they had. There aren't that many. And the ones which do exist here are getting taken away real quick. So what can Turkey do? Can it join a currency board? Yeah, that's what that Steve Henke guy said. But any currency board is just going to have to absorb the troubles with the US dollars and add that to its calculations. And if you think that's simple, have a look at this. So Turkey, 14% interest, 21% inflation. So it's a spread of 7%, right? 7%. Well, the 7% is America's, the US dollar's current inflation rate, given our 0% interest rate, right? So 0, 7% inflation means -7. Go back to Turkey. Turkey had 14% in interest, 21% inflation. That's 7 again. They're equal. It's the same. You're losing 7%, right? You're losing 7%. So if we use this currency board, yes, it's going to help in credibility and dependence, but for how long? How much credibility will the Federal Reserve have if this stuff continues? They have plenty right now, but in a year, in 2 years, in 3 years, in 4 years, much less. It seems to be dwindling every day. So today, the main argument here is that you couldn't even apply Bretton Woods at this point to fix Turkey. It's not a solution. There's nothing they can do beyond not even fixed rate any longer because they're running out of reserves quickly to be able to fight that fire. So what's next? What's next? Well, if you look at Paraguay today, they've absorbed or voting to make Bitcoin legal tender, just like El Salvador. So that's 2 countries. There's more coming. I predict more coming. And more countries that get into this bind will be forced. They'll be forced to make choices that don't involve the US dollar because the US dollar is more of the same trouble. That's my prediction. Maybe I'm wrong. Could be. Let me know. But for now, my prediction is Turkey is another country that will be forced into the Bitcoin standard in the short term, not the long term. And it'll probably be the people who do it because Bitcoin is selling like hotcakes over there. That's all I got for today, everyone. Thanks. Bye.